So there's more than one way to complete a transaction. Traditionally, a consumer would pay closing costs, $3,000, $5,000, $6,000, $7,000. They would either pay them out of pocket at closing, or they would roll those fees into their loan by increasing their loan amount and giving up some of their equity, which in the old days was the majority of the way business was done. However, though, on the radio, for example, you hear us talk often about no closing cost loans. In this situation, the closing costs are paid by the lender on behalf of the borrower. They don't pay any fees out of pocket, and they don't roll any fees into their loan amount, thereby preserving their equity. So we do both at PrivatePlus. However, more and more customers choose the no closing cost option because it tends to be the better answer for the majority of their scenarios. I think that the main reasons are that while there are opportunities where one scenario might be better than another, by and large, the no closing cost platform fits today's consumer better. And by today's consumer, what I'm talking about is you have to sort of understand their characteristics. By doing a no closing cost loan, the consumer puts themselves in a position to take advantage of future savings opportunities or changes in life circumstances without paying the fees and without giving up equity every time they adjust the financing on their mortgage. What drives this is because people are staying in their homes for a shorter period of time than they did 30 years ago. And as they tend to change their housing, they need different financing. Because there are no fees that are charged and there's nothing rolled into their loan amount, they're able to move in and out of situational loans without losing equity or without spending money out of pocket. So therefore, they get better savings. They get a better resolution to their problem. The difference in interest savings on a monthly basis from a closing cost scenario to a no closing cost scenario is usually very small. And the reason I say that a no closing cost loan traditionally helps them save more money is because if you spend, for example, if you spend $7,000 to refinance a $350,000 loan, and that $7,000 only buys you an additional $46 a month in savings above and beyond what you could do for a no closing cost loan. Once you understand that $7,000 saves you $46 a month, you can take what you spent and divide it by what you saved and go to a break-even point. And in this scenario, which is a very normal scenario, it would take 152 months or over 14 years just to recoup the $7,000, let alone start saving money above and beyond what they could have done for free. It's very important that you always consider both options. But what we've seen, and it correlates with the growth of PrivatePlus, is that for the majority of customers, the no closing cost option fits them better and gives them more savings. So if you want more information on comparing a no closing cost to a closing cost loan for your scenario, please go to our website, click on any of the links that talk about no closing cost loans or no cost comparisons, or call PrivatePlus. One of our advisors will take you through the process. It only takes a couple of minutes.